Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the cycle bullish scenario where we are looking for a buildup of multiple 1-2s for eventually a big push to the upside. In this scenario, what is important is that each wave 1 is a little bit shorter than the previous wave 1. Yellow wave 1 over here went to the 0.786 trend-based fib extension taken from the low to the high to the low over here, of course on log scale, and the green wave 1 went to the 0.618 taken from the low to the high to the low over here. What you can also see is that the wave 2s are deeper each time. So the first wave 2 went to the 0.236, the second one the 382, and the third wave 2 in green went to the 0.5. Also, time-wise, the yellow correction is a little bit shorter than the red correction wave 2, and the green wave 2 is the same time as the yellow wave 2. So in the bullish scenario, preferably, this is the low on top of the 05, same length in time as the yellow wave 2, for then a move towards the upside and new all-time highs to come. Now, based on the length in time of the impulsive structures and the estimation in price with the 0.618 and the 786, we could say that between August 24 and October 25, a potential all-time high can be made between 100k and 180k. Now, if we then look at the beginning over here of this move to the upside, then we can compare it with previous structures in the past, the beginning of the green wave 1 and also the beginning of the yellow wave 1. And these are the bars patterns that I have over here. So this was the COVID dump, as you can see, and if we put this on top of the current price section, then we're actually not doing too bad, as you can see. Over here we have price ranging at the moment, but it's the same as the range we had over here. Long sideways structure, then eventually a dump, before then a move towards the upside. So price and time wise, it's quite comparable to the previous bull market structure, the beginning of the bull market. And this structure over here, this bars pattern, comes all the way from down here, the beginning of the yellow wave 1. And if we put this on top, then you can see that also here we're not doing too bad, right? Price, yes, moved to the upside, long sideways range, but we're still right around where price was in previous bull market. So of course, preferably in the bull scenario, the low is in, you're going to be moving towards the upside. If we then zoom in to this structure over here and how we count it, then we have to look at this over here. So we then have a 5-wave move finished, wave 1, right? Then wave 2 in green on the other chart, and then you're going to be looking for all-time highs. But in a bit more detail, you can see that wave 2 just missed out on hitting the 0.5. Now, the most common target for a wave 2 is the 0.5 to the 0.786 between 15k and 6.1k. Just missed out on hitting it. The 0.382 is a less common target, and that one, of course, has been hit. And also the low of this wave 2 has been made just before the 0.382 fib time, taken from the low to the high of 1, same with the fibs, by the way. And most commonly on lower time frames, at least, the low of a wave 2 is made behind and after the 0.382, so at least that's something to keep in mind. If we then go to the cycle bearish scenario, then we have to look at this scenario over here, where we do have the high of a very high time frame wave 1. So a cycle wave 1 is finished, and we are now in a multi-year bear market. Now, as just mentioned, most commonly a wave 2 retraces to the 0.5 to the 786, which is $400 to $20, which of course does not make any sense. But what you also saw is that over here on the very high time frame, you can have very, very low retracements to begin with, 0.236, 382, and here it kind of hit the 0.5. So with that in mind, in my opinion, the 0.236 is the main one to look for at 6k, and also above the 0.236, just above 6k, we have very important support. Importantly is that we are looking for a very big 3-wave structure, a multi-year bear market over here. If we then go and zoom in to the macro bear scenario that leads to what I just mentioned, so more downside, first up and then down, then we have to look at this over here. So we over here have then the green wave 1, a finished red wave 1. So this one over here, cycle wave 1 is finished. You're looking for a 3-wave 2. cycle wave 1 finished, and you look for a very big multi-year wave 2. In this particular scenario, we're then looking for the shape of a zigzag or WXY to the downside, where wave B is a 3-wave structure. Currently A is finished, working on B, then eventually a C to the upside, where the high for this wave C and potentially B can be made between 39k and 50k. There's incredible resistance over here. You have the golden pocket with the point of control at like 3940k and the 786 with the value area high at 50k. So that makes this area very, very important. Now, if we then look for a move towards the downside, we have great support over here between 8k and 11k, where we have the golden pocket taken from the low to the all-time high, as well as the value area high of a multi-year volume profile, 9.7k. So you can see the golden pocket and the blue line are crossing each other. Great support over here, and also the potential target area of wave C between the 1 and the 1.236. Now, in this scenario, you then expect eventually a bounce towards the upside and new all-time highs to come. Now, if we then zoom in to the daily and look at where we are at the moment, then there's two scenarios that I like to show you. So the first scenario is where the low is already in and we are now looking for new highs to come, 32k to be taken. In this scenario, we're looking for either a wave 1 or A, 2 or B, for then continuation in a wave C or a wave 3. Because the thing is, in both the macro and cycle bullish and bearish scenarios, we actually first want to see price moving up anyway before a potential drop to lower prices or continuation. So an A, B, C or 1, 2, 3 are both still very valid. In this particular scenario, price over here bounced on the 0.382, taken from the low to the high of A or 1 over here, for then the low of 2 or B, and you're going to be looking for continuation to the upside, where the target for a wave C is between the 1-to-1 and the 1.236, which is between 40.4k and 44k. And for wave 3, you usually want to see at least a 1.618 hit, which is sitting at 50k. And you can see now the confluence between the targets and the macro resistance above 39 to 40k and around 50k. Very interesting indeed. Now, of course, everything happening on the lower time frames and the probabilities here are mentioned and discussed in the daily update videos. The other scenario is that we still have another low to go. So in this particular scenario, we also have wave A or wave 1, but this time, as you can see, it's another high. So the other A or 1 was here, 3-wave structure finished continuation. But in this scenario, A or 1 is finished on the second try at 32k, looking for a zigzag to the downside locally, for then ending between the 0.5 and the 786, which is between 23.7k and 19k for the low of B of 2 or 2, and then continuation to the upside. As you can also see, price just crossed the 0.382 fib time, taken from the low to the high of A or the high of 1, which is exactly also what you like to see here more locally. Now, if we then look at the probabilities of the different scenarios, then currently on the cycle as it stands, as long as the bullish scenario is not invalidated, meaning basically 3k, or I should actually say it differently, as long as the low over here is not taken at 15.4k, the bullish scenario naturally has a higher probability, because locally we still expect to move up, and based on this second leg, it's going to be a wave 3 or a wave C. We observe the reaction at 40-50k, then we can get probabilities for either down or up. But as long as we are above 15.4k, it doesn't make sense to yet talk about everything below here, of course. So we will first need to wait for the move up. So probabilities here are bullish, still shown different, of course. If we then go to the weekly time frame and the macro, then both the macro bullish and bearish scenario probabilities show that price still has some more upside to go. So in the bullish scenario, we of course want to see continuation in a wave 3. On the bearish scenario, we also are still looking for a move to the upside, observe the reaction, but then a move down. So it all depends on how price would then move towards the upside. And if we then look more locally, Currently, the higher probability scenario, also based on all my daily update videos, is at the moment that price is still going to find a new low over here, take the double bottom, fill the buy bid wick, look for a low somewhere over here before then continuation to the upside. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.